Hi, good evening, everybody. My name is Shaun from Berg. I'm from PSG Online. Welcome to our webinar tonight. Our topic is Introduction to Investment Clubs. Here's the agenda, very briefly. Just a quick introduction. What are investment clubs? Why investment clubs as such? I know many of you are maybe considering starting a club, and some of you might be involved in investment clubs already. So we're going to try and cover all the bases as such. Okay. Now, before we can get started and ask the question, why investment clubs, we take a step backwards and we can break that question into two. Number one, why invest in shares and why use that through investment clubs? Now, this little chart here shows you the JSE All Share over the last, say, roughly 30 years. Now, you can see that trend, number one, is up. And if you had to calculate that percentage growth, it's roughly about 600% over the last 30 years. So it's about 20% growth per annum. So that is what a lot of people are attracted to. And obviously the JSE is one of the better investment vehicles because of that growth, outperforms inflation by a far margin. But saying that, you can also see in the red blocks, in the red boxes where I've highlighted where the market has what they call healthy corrections. Way back in 1987, we had the little crash here. That was a 27% drop. Took the market nearly 2 years to recover. 1998, we had the Asian crisis and the contagion from that. Also again, took the market 2 years to recover. 2000, we had the whole NASDAQ bubble bursting. More recently, 2008, we had the whole subprime crisis in the States. But as I say, the market always recovers. Now, why investment clubs? Now, I find that one of the better things to look at when you look at investment clubs is that what I call collaborative investing. It's all very well to sit at home as a do-it-yourself investor, but when those little healthy corrections happen, a lot of us panic and we rush out and go sell our shares, and obviously we sell them for the wrong reasons. Involved in an investment club, now with the collective wisdom of the club, we can make better informed decisions, and we use what I can call a committee to help you make informed decision, not impulsive, not emotional. And I think that's one of the major advantages of the investment club, is that collaborative investing. But saying that also, profits and losses depend on the ability of the club to choose the right shares, number one. And number two, obviously, it all depends on the information gathered to make those decisions. But, and we'll talk about it just now in the process, if you can go through the process and having a systemized approach to the market and everybody agrees on choosing a share, you'll find that's one of the major advantages of the investment club. And I think the biggest advantage is that leverage. I say it's a secret of the investment clubs. You're leveraging off other people's time. So obviously we can spread the workload more easier. Also, we can pool our funds together, and we talk about leveraging off other people's money. Collectively, we can buy the better quality stocks and the big blue chip shares, where by ourselves we'll be concentrating on the penny stocks. But also, you might have investment clubs as diverse as having doctors in it and engineers. We're also leveraging off other people's knowledge. So you don't have to go reinvent the wheel and get to know what the industry is all about. Just ask them what's happening in the market. There's also that network. There's a lot of other investment clubs, and you can start networking with other clubs and find out what systems they've been using and what's their success and things like that. Okay, so that's just a quick introduction. One of the biggest advantages of an investment club is, as I say, for a small joining fee. Imagine this acorn to oak tree approach. Now you're starting out small, but I want you to think big. So, you might start off with a small joining fee. The idea there is to jumpstart your investment club. When I say small joining fee, might be 500 Rand or to 1,000 Rand, whatever the case might be, but you got 10 members. Now if you had 500 Rand, now you got 5,000 Rand. Now with 5,000 Rand, you can go into the market and go buy one share within 1 month. Okay, so that joining fee, we'll talk about it also a bit later. It's also one way when you start first establishing your club, you're going to find out who are the serious people that really want to join. By using a small joining fee, I find that you sift through the gravel, through the chaff, and you find the wheat. Okay. Also important to understand that on a monthly basis, so we bring in what I call rand cost averaging and all those other little things connected to that. You're putting our funds together, be it 100 Rand a month, 200 Rand, whatever the case might be, but collectively that money adds up. Okay. Remember, as I said just now, you're also leveraging with other people's time. You're going to meet once a month okay? And we're going to discuss the market. Obviously, in between meetings, there's also things happening, but you're leveraging off that time together to make informed decision. I believe one of the things to investment clubs that makes a club successful, it must be fun and sociable. If it's a real schlep, you don't want to go along to those meetings. So I find one of the better ways of looking at this club, and I know some clubs in Pretoria where these guys get together, they order pizzas in and they have a few drinks, and while they're having a meeting, they're socializing. Okay, they're talking about, obviously there's agenda, but they are socializing. Your club must be profitable. So that's one of the main reasons why you want to start an investment club. You want to invest in the market because you want to make money and you want to be profitable. And third element, I believe, is what makes the club also very successful. There must be that element of investor education. And that's why I'm passionate about in clubs. It's one way I find you can help the man on the street, average Joe, to learn about the market by doing it collectively, and have a program where we can learn about the market in small bite-sized chunks over a period of time. Ultimately, as a club, we'll be making more informed investment decisions. So those are some of the biggest advantages I find in investment clubs. So let's get started into the nitty-gritties as such. To run a successful investment club, I believe you need to start with the right people. Now, this is a tricky question. People ask me, now, who are the right people? I find that one of the biggest things about a club is, yes, we're talking with small money when we're first starting out. There's an acorn approach, but down the line, we might be a big, tall oak tree, so it might be a few million rand. So trust is a very, very important thing when it comes to starting with the right people. So it's family and friends, people you know. But saying that, that's one side of the coin. Some people also like to start clubs with people they don't know. And I find that people ask me all the time, Shaun, I want to join a club. And that's very, very hard to do that because, as I say, there's a barrier to entry, that trust, they don't know you. So the easiest way to overcome that is to ask your family and friends, who do they know who's involved in investment clubs? Okay, so starting with the right people is your family and friends, but then also invite other people to come and join in the club, because you want diversification, or a diverse group rather, different backgrounds and that. And I find some of the best investment clubs is a mix between male and females. I find the males are more the cowboys. They want to chase any share down, where the ladies are a bit more prudent, a bit more conservative, and they take their time in doing the analysis. So it's that nice little balance. So the second question is, how big must my club be? And I find that, I like a club of between 10 and 15 members. You don't want to have too many members, because I find that some people come along for the ride, they don't do the work, and they just, they're there for the snacks and drinks. They're not putting their weight. Where a group of, say, 10 people, and we talk about the structures just now, where everybody has a function, everybody pulls their weight, I find those are the clubs that last, and those are the clubs that become successful. Okay, so between 10 and 15, I suggest a maximum maybe 20. And that is also, you need to put us in your club constitution, your club rules, the size and things like that. So we spoke already about contributions, maybe talking about a starting contribution and then monthly contributions. The club needs to agree on that at the outset. Okay, it must be affordable for everybody. If one person can't afford it, then that's going to be a problem down the line. So it must be affordable, and everybody must agree on it from the outset. When I talk about the club structure, we're going to talk about electing office bearers. We need a club president. This is the person that actually deals with a stockbroking firm, that places the orders and things like that. Most of the time, stockbroking firms, for example, PSG, will need a resolution from all the club members, and the club members appoint one person to do all the transactions. So the club president, that's his function, number one. Number two, obviously, when we have meetings, the club president facilitates the meeting. He chairs the meeting. You can call it the club president, you can call it the chairperson, whatever the case might be. But he's got a specific function. He's there to manage the club. I also believe it's important to have a club treasurer. Now, that's someone that is numbers orientated, someone maybe might be an accountant, because this is a person that will be managing the club's finances. Now, one of the questions that always comes out from people in this, when I do presentations like this, is what software do you use? And I found that here in South Africa, I haven't really come across any accounting software specifically for investment clubs. I know in the States there's a company called NAIC, National Association of Investment Clubs. You can go to their website. It's called betterinvesting.org. Betterinvesting.org. There's a whole thing about investment clubs in the States. But as I say, the challenge of that, it's very Americanized. So I find the easiest way to do this is to have an Excel spreadsheet. At PSG Online, we are busy creating a Excel spreadsheet that we'll be able to give to people that are wanting to start investment clubs with the idea of unitizing people's investments. So the club treasurer has got a very important role in managing the funds as such. The club secretary is the person that sends out the reminders for the club meetings. The person who's going to take minutes in the club meeting. It's the person that controls the club's constitution, the club rules, all the documentation. It's a very, very important job. And then we also got you can also have the alternative of having a fourth member to the what I call the executive, is what I call the club educator. It's usually what I call the vice president or the vice chairman. So if the club chairman's not there, someone that steps in, but might be the two signatories to trading on the club's account as such. Okay. So the club structure. When I talk about the club structure, everybody has a function. So we're talking about member responsibilities. Ultimately, collectively, we're going to make decisions based on certain criteria to buy a share. But we'll have an investment committee that puts forward recommendations, and then collectively the club votes on a share to purchase, etc. Okay. So there's a role for everybody in the club. There's no free ride for anybody. Everybody has a function, and obviously this all must be documented in detail in your club's rules and regulations, your partnership agreement, whatever the case might be. I find clubs work well when they have regular meetings and at a regular date. So it might be the first Tuesday of every month, and also at a regular time. So people are creatures of habit. We know that every month, the first Tuesday of the month or first Wednesday of the month, that I will be going to my investment club meeting. So you can schedule the time up front. You can plan around it, and obviously you're committed to those meetings. Some clubs have the rule that you're allowed to miss one meeting a year, or whatever the case might be. I find successful clubs are the guys that work together and they're committed to the success of the club. When it comes to duration, I suggest don't have it more than 2 hours, and that's including the socializing. So keep it to maybe an hour, doing the minutes and the feedback and all that kind of stuff, and then afterwards socializing over drinks and talking about the market and things like that. Okay, so maximum 2 hours. Location. I find people have it at the offices, in their boardrooms. Some people have it in the pub, in a separate little room. I just find obviously sometimes you might be distracted by the noise, but have it a regular time, a regular place, and things like that. Some people like to rotate around people's homes. I just find that people then try out to each other with snacks and that. Just have it a regular time, and everything's always the same. Okay. We spoke about the club treasurer and keeping records of the finances, and the record keeping, very, very important. As I say, think of Acorn. We're starting small, but I want you to think big. Down the line, record keeping is very, very important. Number one, obviously, to show you how your investment club is operating, to highlight for you where the problem areas are, but also, very importantly, down the line, tax reasons and things like that. I find clubs fail when they do not agree on an investment philosophy. So clubs start out and, yes, we want to be an investment club. Some of you might have the idea that investment club is a buy and hold strategy. Some of you might have the view that investment club strategy is position trading. We're trading more the cycles. So it's very important that everybody agrees on the investment philosophy. Now, the idea is that investment clubs has buy and hold for at least 3 years, etc. I know some clubs, and this is something I'm very interested in, maybe starting a trading club. So we now we get involved with trading single stock futures or CFDs. And the idea is the same. We're leveraging off other people's time, other people's money, but now we're also bringing in derivatives, and we're also bringing in gearing. Okay, so there's a lot of things you can build around it, but it's very important that you have an investment philosophy, and everybody agrees to their investment philosophy. Everybody's on the same page, in other words. Okay, So when it comes to meetings, obviously, when you're first starting out, you want to spread the word. You want to tell your family and friends and work colleagues that you all want to start an investment club. Okay. You can send out a little email, tell them what your plans are and things like that. Obviously, set up a preliminary meeting, invite the interested people to the be it the pub or to your office, wherever the case might be. Provide snacks and drinks, be it chips and Coke. Okay, start small. Obviously, this is coming out of your pocket initially. But the idea is that you want to discuss a formation of a club and you want to find who's interested. And then from there, you want to set up the inaugural meeting or the very first introductory meeting. So, as I say, if you introduce things like a joining fee, you'll find a lot of people won't get involved. The serious people want to get involved. Okay, so you decide on the name of a club. I've been involved in clubs that are called Money Bees or Honey Bees. There are a lot of different names, and obviously BBC, Billionaires Boys Club. There are been so many clubs that you have all these big dreams in the beginning. But important, as I say, decide on the meeting place, time, and duration, and have this all documented. Define people's roles and responsibilities, the club rules, constitution. So ideally, you want to set all the stuff out before you have your meeting so people can read this. So in between meetings, you'll have people doing homework. So, they're coming prepared. And you're using that time together. I call it synergy. 1 + 1 doesn't equals 2. 1 + 1 equals 3 in investment club scenario. That's where you're going to leverage off those ideas. So your monthly meetings obviously must be structured. So the club secretary will send out the agenda. We'll have a president's report, obviously the holdings that you might have in your portfolio, how those companies are doing, the treasury feedback, how much each member is worth from a unit point of view. The education officer might step up and have a 10 or 15-minute spot talking about small things like what is the PE ratio, what's the best PE ratio to use, but also more importantly to use it as a discussion. What do you guys think and how can we use this? And then ultimately using that going forward in your investment philosophy. Okay, discuss how we can create a watch list, how we can do research, how we choose our potential winners. So must be interesting. People must come along to these meetings. Say, I can't wait for the next meeting. Remember, I want you to think long term. When I say long term, 3 years plus. The clubs that are successful think long term. Okay, the guys are thinking just money. No, I haven't spoken about money yet. We're talking about money now. We're talking about getting the club to work. The money will come. Okay, so let's talk about education program. And this is how PSG can help you guys. We talk about the 3 sides to make him to become successful in the market. Now, first of all, obviously you get the theory. You can go to the Pick and Pay or to CNA, for example, and buy a book about learning to ride a bicycle. What's one of the best ways to learn to ride a bicycle? To get on the bicycle and fall off. Okay, so the idea is that you learn by your mistakes. So in the stock market, yes, there are a lot of books, there's a lot of courses available. We've got online tutorials, online videos. I have regular webinars, traders forum. That'll give you all the theory. Okay, but what's important now is to apply that theory in a risk-free environment. So we offer a simulation, trading simulator. You're trading the top 100 companies, real JSE shares, real trading costs, everything, but risk-free. Okay. So the idea there is I want you to make mistakes. Before doing it with your own money in the club, first of all, doing it in a risk-free environment. Now, another JSE also has quite a few different virtual traders, trading platforms. You can also use that scenario. But the idea is that it can teach you how to use the trading platform, how to place orders, number one. But more importantly, it's for you to gain confidence in your stock picking abilities. So I know a lot of investment clubs use the trading simulator as a piggyback for the shares they buy in the real market. So practice is very important. So with theory, we take it from 0 to euro, and same with on the practical side, we take it from 0 to euro. Remember, confidence is the main thing. And the third leg of the story is support. Any questions you might have, be it tutorials or to do with investment clubs, I'm a phone call away or email away. Okay. This presentation, by the way, is being recorded, and we'll be sending this presentation out to you guys. Use this for your investment clubs. Okay. So I'd like to hear more from you guys a bit later. From the theory and from when you start getting involved in the investment club, and I said one of the most important things is having an investment philosophy. So yeah, it's just some ideas, 5 little ideas regarding having investment philosophy you can build around it. Investment, between an investor and a trader, the difference is your time horizon. So buy and hold strategy. Think of buying shares for your children. You want to leave a legacy for your children. If I buy once and I don't sell, I have a very low portfolio turnover, obviously low cost. The idea is that also you want to buy shares and hold them for at least 3 years. If I decide to sell after 3 years, then capital gains tax applies, and which is much lower than income tax. I don't want to go too much into tax here because obviously there's different structures that you can set up investment clubs. So just understand a buy and hold strategy after 3 years, capital gains tax is much lower than income tax. Remember I spoke about the rand cost averaging. The idea is to invest regular every single month. You don't want to wait for opportunities. So you decide, I have shares on my watch list all the time, I've got opportunities here, let me get involved. Okay, as that regular investment on a monthly basis, that'll make you successful. You want to buy into companies that are paying out dividends as a form of income, and you want to reinvest that money back into your investment club as that magic of compounding. Your money's working for you now. Remember, the idea is thinking 3 years down the line, 20 years down the line, whatever the case might be, is yes, and now we start looking at maybe taking money out of the portfolio. I suggest maybe separating some funds and creating a trading fund, and that trading fund is your income. Okay. Remember, one of the major advantages of the investment club is that collective wisdom. So that careful selection, doing the research together and investing together in either value or growth stocks will be the odds in your favor, and that's also going to help you become more successful. Also very important, it's not so much about making money, it's avoiding capital losses. So it's very important to use risk management. So you don't want to put all your eggs in one basket, put all your money in gold shares, for example. You want to diversify between 3 and 5 different sectors, and maybe between 8 and 12 different shares. You'll see a diagram just now where, you know, one share falls doesn't affect your whole portfolio. So these are just some of our ideas regarding a successful investment principle. Okay. So this is, I believe, it puts you in the starting block when it comes to investment clubs. You know, you want to be able to obviously tweak it as it goes along with time and as you become more knowledgeable. But I find that instead of looking at the whole market, you feel overwhelmed. Yes, collectively as an investment club, yes, I've got 10 people looking at the market, but I still find it's much better to make a smaller, more manageable list of shares. So instead of looking at 400 stocks, you want to go through the process of maybe creating a watch list. We go through the process of prospecting. I've started an idea from the mining industry. You want to focus on the shares, not gold shares, but you want to focus on the gold nuggets, the shares that have growth opportunities, and ignore the gravel. Okay, so on PSG Online's website, for example, we allow you to create 3 different watch lists, and that puts you in the starting blocks. And from there, big time saver, because now all the analysis is linked. So we go to the second phase now. We start looking at fundamental analysis and technical analysis. On the next slide, we'll go into more detail. But ultimately, you want to choose shares for your, might be the simulator or might be for your initial portfolio, between 8 and 12 different shares. As I say, it's spread between 3 and 5 different sectors. And that's the process that you want to get to. Obviously, there'll be some shares in your portfolio might give you sell signals based on certain criteria. They'll move out of your portfolio back into your watch list. And from your watch list, some shares might be suspended, or they might just be loss-making, and you change your ideas, you drop it off. But as we go through time, you can change and refine and review this process. Okay. So, analysis process. Again, the club needs to agree. How are we going to choose shares? You use fundamentals, we're going to use technicals. I like to use both. I coined the phrase rational analysis. The more I know about a certain share or sector or industry, the more informed I am, and hopefully I make more better informed decisions and obviously make more money. Imagine as an investment club how much power you got in there. I like to look for shares that are undervalued, profitable, with manageable risk. And I just very simplified it for you. You can look at, when I talk about valuation, you can look at a PE ratio. The market's at about 16 now. So anything below 16 would be considered cheap. I'll go one step further. I can look at PEG ratios, price NAV, all those kind of things. So you need to document this as your club and decide how you're going to choose shares. Okay, I like to focus, as I say, on undervalued stocks. I like to focus on shares that are profitable. I use a profitability ratio here called return on equity. My benchmark, I'm looking for shares 15% plus. Yes, you can go for higher returns, but I'm looking for sustainability. So again, the club needs to decide what's their benchmark. These are all benchmarks the club needs to decide. Risk management, in the past we used to look at what they call debt equity ratios. I like to look at what they call interest cover. As long as the interest bill is covered 3 times out of earnings, I say it's manageable. This is for a large cap stock. For a small cap stock, you might say 5 times cover. Remember, it is risk management. So I also look at things like cash flow. These are all criteria that you'll use to help you make a decision in what share must I buy. When we look at when must I buy, we look at technical analysis. I like to buy shares that are trending. Obviously, I'm looking at equities. I'm looking at shares in a long-term bull market. So I can look at cycle analysis or in the primary analysis, primary cycle, higher highs, higher lows. I can look at moving averages. Is the share trading above a 50-day and a 200-day moving average? The trend is bullish, yes. Within that long-term primary cycle, are we trading at the top or the bottom of a shorter-term cycle? The second thing I like to look at is overbought, oversold. Where are we in the long-term cycle? Are we at the top of the cycle or the bottom of the cycle? And this is where you start using indicators like the RSI or the stochastic indicator. I also like to use the MACD. It doesn't matter, as long as there's a tool that helps you determine are we at the top or bottom of the cycle. So that helps us determine where are we with regards to price action. The other side of the coin, also you want to look at volume analysis. Remember, volume is the number of shares traded, and that confirms price action. So now we start looking at indicators like on-balance volume and volume price trend to help us determine is there accumulation or distribution of volume. And the third thing I'm always looking for, I like to buy into shares that are outperforming the market. In other words, I'm going with the shares that are strong. Okay, so I use relative strength analysis. All it is taking $1 stream divided by another dollar stream, be it a share relative to the index or the index relative to the JC All share. But I want to see that upward movement that tells me we're market outperforming. If the trends the other way around, we're going from we're trending downwards, we're buying into a share that's underperforming. So in other words, it's telling you there are better opportunities somewhere else. Okay, so those are the 3 simple criteria that helps us to determine when to buy. You can also use the opposite, obviously, when to sell. But from an investment club point of view, I want to combine the fundamentals with our technicals, and obviously I want to make a more informed decision. So ultimately, as an investment club, you want to get to the stage now where you want to create a portfolio. So yeah, I'm using an example of I want to build a portfolio of 12 shares. I might want to allocate, let's say, for example, I've got 100,000 Rand, and I want to choose 4 large cap stocks. Those will be my pillars. In other words, I'm going to allocate roughly about 12.5%, 12,500 Rand to my large cap stocks, and then I'll allocate lesser funds to the more risky stocks. So in this example, I'm allocating 5% to 5 different companies, also to 8 different companies. So the idea is that I'm spreading my risk. I'm structuring my portfolio along the lines of quality, but also if you can look at the scenario, yeah, if I've got 100,000 Rand, I'm allocating 50% to large caps and 40% to mid caps. In this example, I'm also keeping maybe 10% for in cash. Now, this works 2 ways. Number one is I don't want to be fully invested, number one. And number two, what happens when one of your investment club members wants to leave? And you don't want to be able to be in a situation where you have to sell shares to pay out your member. So this is the idea. So the idea with the portfolio, we're talking about the 3 S's in this scenario: the structure of the portfolio and the spread or diversification. You as an investment club need to decide, will you use a stop loss facility? Remember, it's a buy and hold strategy. I personally don't like to use up a stop loss facility in a long-term investment portfolio. I use valuation. If the share gets overvalued, then I might use maybe a 20% stop loss. I prefer to rather use single stock futures as a hedge. So as a club grows and your portfolio gets bigger and bigger, maybe consider opening up a second account with just single stock futures for the ideal reason of just hedging the risk. Okay, so I hope you guys found some benefit out of this. So some ideas. As I say, you're welcome to send me some questions and things like that. Why PSG Online? We've been nominated, or we won the Stockbroker of the Year 3 years in a row. Number one, for our trading platform, and number two, for the research tools we have on our website. But also, from a support point of view, we're there to help you. As an investment club, we've got online tutorials, webinars, all these kind of things to help you get started. So the idea with obviously the trading platform, one login, one platform, and this is one thing I recommend that you guys do, is that you guys sign up as an investment club, you open up an account in an investment club, and then each individual member goes and registers what I call a free trial. Then you link that free trial to the investment club. So you have view-only access to the investment club, but each one of you can also have a free trial, and you can buy and sell shares in a risk-free environment linked to that profile. Okay. So just in summary quickly, before we conclude this, the major advantage, I believe, is the leverage. Leveraging off other people's money, time, knowledge, and experience. Remember also their network. But also, I believe that leveraging off other people's motivation, that energy, makes the club also very, very powerful. So remember, time is important. So you're only meeting once a month, but you want to use the time very, very effectively. So in between meetings, there's a lot of homework to be done. So remember the 3 main criteria. I want to start an investment club because I want to make profits. I want to learn about successful investing, but also I want to make it fun and sociable. So that whole community scenario. So decide on your structure. We haven't really gone into that too much, but we talk about partnership agreement. You can talk about setting up a club in a company format, and there's also a voluntary association. There's 3 different structures, and there's also different pros and cons with each one of them. Your elective executive team, very important to have those roles, and also each person involved in the club must have a function. There must be that role to be played by everybody. Everybody has to bring their part to the party. Your monthly contributions, we've discussed really, but very important. I want to highlight for you guys that investment philosophy must be agreed upon, number 1, and number 2, must be implemented. Okay, so guys, in conclusion, as I mentioned just now, open up a trading account, and each member link their profiles so you have view-only process. It's also a bit of call it corporate governance. Everybody can see what's happening there. There's no shenanigans. Everybody knows what's happening on a daily basis. Okay, use our education resources via our online tutorials, webinars, and things like that. We're there to help you, to make you become successful. So as I mentioned a lot of times with the analogy of the acorn, think big, although you're starting small. So from my side, good luck and happy trading. Here's my contact details. If you guys want to send me an email, you want to contact me by phone, but I'm there to help you. Thanks for your time, and enjoy the rest of your day. Thanks. Bye for now.